Welcome to The Missing Link, a podcast where crypto and insurance come together. I'm Dan Roberts, and my co-host is Danielle Wall-Elliott. Whether you're in crypto, traditional finance, or in need of a new podcast, The Missing Link will help you explore the vital role that insurance plays in crypto and how blockchain will disrupt insurance. Join us on our journey to find the missing link. Hello, everyone. This month on the Missing Link podcast, myself and Danielle are joined by the Uber traveler, Dan Thomson from InsurAce, our second sponsor on the podcast. He discusses his crazy 1 week of prep time for the successful launch of InsurAce, how they ramped up from 20 covered protocols in the first week to around 200 today. And we discussed the exciting opportunity for embedded insurance in the Web3 world, a great behind-the-scenes account of the Terra Luna depegging that InsurAce had a major role in the recovery. We also had a very eye-opening missing link this month with the first mention of how AI could be using blockchain in no time, something about fridges talking to each other, I think. Computers and robots may have more use for this technology than humans, it seems. Either way, it was a great conversation. We hope you enjoy it. Over to Dan, and Danielle. All right. Hi, everyone. Great to have you all listening and to be back with another podcast. We have three Dans today, myself, Danielle, and then we're joined by Dan Thomson. It's an exciting one again for us, part 2 of our sponsor series. Another reminder, a sponsor is the role that we allocate to participants that are running a program on the name's infrastructure. And that program is tokenized to allow new capital to come in to back the particular insurance vehicle that the sponsor is proposing. So we will be chatting through InsurAce's involvement and the program that they're bringing forward, and a bit about their story and who knows what else. So great to have you here, Dan. How are things?
Yeah, thanks for having me. No, all good, thank you. It's been a long time for us to get to this point, right? I mean,
that's right.
We first started talking, must be just around 2 years ago now.
Yeah. The detail, 2 weeks, 2 years,
I'll take a stab at introducing you, and you can add in if I've missed anything here. But yes, today we're joined by Dan Thomson, CMO of InsurAce. He has a passion for the DeFi space and is leading the marketing efforts with the InsurAce protocol and positioning it as a leading DeFi insurance provider. They are focused on broader coverage, lower cost, fair and transparent governance, and sustainable returns, which is something I'm really passionate about as well. And you're working closely with the community and the advisory board. So yeah, let me know, what did I miss? What else would you want to share with our listeners?
No, that's pretty much it. I mean, we're all in startups in this space still, so I think everyone wears many, many hats and everyone gets involved in a lot of other stuff. But that pretty much covers my official roles and duties day to day.
And yeah, you might be one of the most well-traveled people I've ever met in my experience in this crypto space. You're always somewhere new in the world, a little like Carmen Sandiego.
Yeah, there's this guy from Statefish, Chung is his name, and for the longest time, I always thought I was one of the most traveled people I've met as well. Now I'm on 103 countries, and this guy, he's on like 70 flights already this year. He's just always bouncing around the world. It's really amazing to watch how he actually manages to function doing it. And yeah, I mean, I checked him the other day, and I've actually managed to catch up with him in the amount of countries. So I'm between me and him, I'm now considering it my own personal sort of marathon race with him. Let's see who gets where and when. But he's on planes every single day.
You guys should go on the Amazing Race. Team up.
Nah, too small. Doesn't go far enough.
Well, we have some quick questions just to warm you up and introduce you even more to our listeners here. So we have a lightning round. So quick answers. We'll ask you to rate yourself 1 to 10 on crypto knowledge, and then follow that up with a 1 to 10 rating on insurance knowledge.
Sure. I think it's very I guess relative to this space, I mean, if you're talking about sort of like crypto insurance, for example, rather than just general insurance, there's a bit of a difference there. But yeah, I think crypto knowledge, I'm probably up there with about relatively high, 7.5, maybe 8. A lot more generalized, a lot less on the detailed tech side. And I swear there are some people who are coming up with things the entire time in the space that, and I'm attached to Twitter. I'm out there at the full sort of forefront of any alpha and information coming out. We have to be in what we're doing. But at the same time, there are just things that come out at conferences and out of conversations that I have day to day that are just completely new. And these guys just talk about it like it's been around for months. And it's a testament to how fast the space moves and how innovative people are here and how adoptive they can be as well. So even though, relative to, I guess, the rest of the world where I'd be like more of a 9, in this space, I always feel like I'm severely lacking behind. But relative to insurance, my insurance knowledge, I don't come from an insurance background per se. So general insurance, probably, lower around 6, but a bit higher when it comes to DeFi insurance and understanding the needs, the requirements, the opportunities, and the possibilities out there and how we can progress the space a bit further forward. So yeah, I think it's relative to the specific and how narrow the field you're talking about both.
And what do you think is the biggest irritation in, let's go with the specific crypto insurance space?
I guess everyone has a gripe with adoption. I think that the crypto insurance is tough as a whole. I think people get into crypto because it's fun, right? I always have these conversations about things like Dogecoin or Shiba, and even though I'd say I'm more on the DGen level, I would really think that I don't have a problem with them. For the longest time, I think I fought against things like Dogecoin or whatever else. And it was created as a joke. It was adopted as a joke, and people who were originally, promoting it, you knew it was a joke, and everyone in the space knew it was a joke. But that joke became something serious along the way. And I think that's where I think that the space has to be fun. It's a joke, but because it's fun, it's kind of being widely adopted, and people like recognize it more easily. They see it as a fun and easy thing, easy to say coin. So that gets them into the space. And if that's the sort of rabbit hole or the white rabbit that Alice follows into the rabbit hole, then so be it. So these things all do have their split use. And then inside the rabbit hole, the universe that is the cryptosphere, it is a lot of fun. There's a lot of money to be made. There's lots of opportunities, lots of creativity, lots of really innovative projects and really incredible people to talk to, and a lot of opportunity all around. So when everything is so fun, and then insurance is kind of like the not fun part of that, right? It becomes a cost rather than a potential to earn more. I think that's probably the perception of this. It's early stage, so you don't necessarily have as many of the traditional risk management people who come into the space who would typically operate in normal markets because they would have avoided crypto up until now. Maybe that's changing, maybe that's shifting. I think in certain markets, it definitely is. You're looking at Vietnam with like an adoption of 50%, Venezuela with a high percentage of adoption as well. These countries around the world that have needed crypto to fill a gap where their banks and governments haven't been there. All of a sudden you've got a much wider adoption and therefore a much bigger uptake in the more traditional people who are used to risk mitigation and used to risk management. So it suddenly does shift that way. But up until this point, one of the biggest gripes has been, I guess, insurance is a tough aspect within a fun space because it is kind of like a colder, more sensible decision, whereas everything else is kind of, let's ape into this, let's buy this monkey JPEG, let's throw money at something Captain Dick Butts. And it's the most just ridiculous space, but the most fun. But that fun aspect has been what's driven the innovation in the space so far. So it's about, I guess, trying to include insurance in a way into that actually makes it fun and easy for people to adopt as well. So that's been, I guess, the biggest difficulty in crypto insurance to date. And,
talking about your travels and being more almost like a global citizen, what do you think is crypto's reputation around the world?
Very good question, actually.
Is it fun or is it something more nefarious?
I think it's definitely fun for people who treat it as fun or have alternative options. So, we're obviously all from Western markets where, we have things that work, right? We have bank transfers that work instantly. We have things like Venmo, Cash App, Revolut. We have different neobanks that do what crypto is essentially like made to do. Yes, it's an alternative, but it is just that. It's an alternative to what is already there and adopted and legal and supported by governments and banks existing. But then you do take something like Venezuela, where their local currency, their government is just not trusted by the people. People don't even bother paying their taxes. So and people can't get their hold on actual physical cash. The local bolivars are useless, and the inflation's at 400%. So people rely on the dollar, but then they can't get the dollars in enough volume or easily enough. So what they're actually using to pay each other now is Binance. They actually literally will transfer Binance day to day. So it becomes a lot less fun, a lot more genuinely adopted as a system of payment across the board. And that would be going to get your haircut. That would be going to a shop, any services, sending money to your friends for whatever, people are using Binance as a way of doing that. And that suddenly becomes a real world use case. That's not even talking about the obvious one like El Salvador, where it's government mandated that it has to be acceptable. So it does get away from the fun, but because it was fun, it gained that awareness, and therefore people did start using it originally. So it can be both. It should be both, and but people do take it very, very seriously, where it is a genuine alternative to banks and governments.
Yeah, no, I've been trying to. Sometimes I catch myself saying like, well, in the real world or a real world asset, and I'm trying to eliminate that real world because crypto is real and it is a real asset. It has real use case like these payment systems that you're mentioning. So yeah, for me, it's trying to get away from more that meme community and just talk about it as like, it is here. It's here to stay. It is part of the traditional world.
Yeah, I've been doing this whole traveling thing for 3 years now, nomading and traveling the world, and having an amazing time doing so. And when people still chirp up and say, "Oh, it's fake money," it's not real. I'm like, this fake money is paying for these very real, incredible global experiences that people would save up their entire life for. And there I am paying for it all with crypto as I go. So that fake, scam money, whatever else, is paying very real things.
Yeah, it's an interesting dance between crypto, its reputation, insurance, and fun or novel or even in some cases nonsense things. Because I feel like the reputation could be framed as very serious use cases on top of nonsense technology, whereas actually it feels like there's some novel, fun, or nonsense things built on very serious technology. Mm-hmm. And I think that's where insurance as a use case becomes very exciting, because it's serious, useful, an understood to some degree piece. Everyone interacts with insurance to some degree, or car insurance, or in a much deeper way. And it can be built on top of this serious, high utility technology. So, just on that, taking a few steps back, would love, Dan, to dive into the InsurAce story, where you joined, what you brought to the table when you joined, and what InsurAce was up to at that time, and perhaps a nod to where it would like to be going over the years to come.
Sure. Yeah, so I was on my travels at the time, and I'd been loosely involved and still are. So I joined InsurAce just over 2 years ago. So 2 years, about 2 years, 3 months, April 2021. And I had been in crypto for quite a while. I bought my first Bitcoin around 2015, set up a fund in Gibraltar for a crypto index fund based out of Gibraltar in about 2017. But I'd actually been just full on traveling for the previous 9 months before I joined InsurAce, and just wanted to get back in now that DeFi had kind of really taken off, and saw a huge opportunity for DeFi insurance as a whole. I love the team, some of the fastest developers I've ever worked with, and they were really, really shipping products fast at the time. So I joined just before the launch, and I remember this very, very well, because I joined and they said, right, we're going to launch InsurAce next week. And I was like, great, where's the marketing plan? What have you got ready? And they said, oh, we thought you could do that. And I was like, great, you give me an entire project launch in a week. And that was a very, very intense week. I remember this particularly well. You mentioned you might be going to Peru soon for a personal holiday, and that's exactly where I was at the time. I was in Lima at the time this whole thing kicked off, and yeah, so it's been absolutely well. We've done incredibly well. InsurAce has been focused on DeFi insurance, protecting users against smart contract risks, stablecoin depegs. So anything like hacks, bugs, exploits, anything that causes users to lose funds when operating in DeFi, we're trying to cover to make crypto safer. And I think that goes back to my previous point about being fun. It's kind of insurance in the space is needed. It is perceived as risky, and us coming in and actually offering these different products allows people to not have that perception, because they can have that guarantee that their funds are safe. And that's what's been nice about this. So we were building for the first year of putting out listings and new protocols going on our app as protected. We were growing very, very fast. It took about a year for the first serious claims come in, and building out insurance in a way that is different for a relatively, well, definitely a very, very new space, but a relatively similar way, to traditional finance. DeFi is a different way of doing something that's already happening, right? So it's just all the same sort of systems are there or being recreated in the crypto and DeFi space. So being able to offer a financial service like insurance in a way that hasn't really been looked at before meant that a lot of things got streamlined very, very quick. A lot of things that are typically very, very slow in insurance. Everything from claims handling to actual sort of like listing of and development of new products, new policy development, all that kind of stuff has just been so fast and amazing to be a part of, because, I think I'm the same as any consumer of insurance around the world globally, historically, in that everyone's had a bad experience with an insurance company at some point. And so, it's nice to see that and to be a part of a team building something and doing something better and different. And that's what InsurAce has been. It's been a way of building out this transparent Web3 native insurance protocol where every part of what we do is transparent, from the capital provision to the claims processes to the policy wordings to everything, and everything being completely on chain in a very Web3 native way, without having to go through KYC or AML, but still protect users as to the full amount of coverage that they've bought for the policies they're buying, has really been a great experience for me. So I think that's also which leads into where we're looking in the future, is just continue to ship out products that continue to protect users in the same way, continue to innovate and change the way that insurance is done. Like even when we actually were, and when we still are looking to get a license to a regulated entity ourselves, even when we're speaking to some of the typical and traditional insurance providers, accountants, lawyers, everything else, and seeing even now in a modern market how antiquated some of the systems are, how slow some of the things are, whereas the Web3 solutions to so many of their processes are just literally, a system, a click, a complete transparency of all data, just a one quick, fast drawdown of actual verified data. And in a decentralized way, is incredible. And there's so much potential still in those systems and in those entities and companies and big names that we all know, to improve in the way they operate. And they're still very, very backwards, and there's still a long way to go for them as traditional finance insurance companies, as Web2 insurance companies. And sure, there's plenty of things we can improve as well. But but it's nice to see that what we are doing is beyond what they would even imagine could be possible.
Yeah, we saw a little bit of the same actually with just some of the questions that you asked, particularly around reporting and access to activity, that the questions themselves were, incorrect. They didn't assume the way that this technology worked, and sort of how often would you be able to report on X, Y, and Z? It's real time. We can give you access, and there it is, and we can create an easy way for you to view and assess that. There are third-party tools for you to view and assess that, but it's in real time. So the original question was wrong, which shows the leap forward, I think, in some of these, very unsexy pieces, reporting to insurance companies and other types of users. But quite significant in an industry that is so large and is very manual, and there's a high cost to doing that kind of business. I'm interested, before we move on, what did that week look like for you when you joined, or was it a total blur? You remember how that went down?
No, I remember everything. I remember because I split the time. The first couple of days I was in Santiago in Chile, then I went off to Lima for a few days. So I remember the food very, very well. The actual work wise, it was intense. So there was a lot of things to learn. I had the previous week to sort of get up to scratch with things, so I knew where we were and what we were building. And then I started quite a few good contacts then at the time. So we pushed out. We did well. It was. We did very well in our first few days of gigs. We were getting the state capital in, and so we already had some investors lined up with capital to deploy. And then the users started coming in. I remember that first sale coming in, and everyone was ecstatic by the fact that we reached our minimum capital requirements of I think it was like 10 million the first day, and then we had our first sale pretty much the day afterwards with our first 20 odd protocols that we launched with. And then it was just all systems go, and it just feels like the foot really hasn't come off the accelerator. I mean, apart from after UST, which I think Danielle wants to ask me about at some point.
Yeah. Well, I'm glad you said 20 that you launched with 20, because that was going to be my question. How did you go from 20 protocols to now covering? I think the website says 147. How
yeah. So it's. Our listing process actually is pretty good and pretty streamlined. But we've probably listed about 250 in total. I think some have been dropped off for various reasons. Either they dropped below our minimum requirements, or they have just had incidents or fallen off, or become too risky, or something's changed. So we used to have a target of like listing about three a week. I think that the process was just quite good. It's just reaching out different protocols. We can list anyone anytime, but we would prefer to have contact with the team to give better risk assessments and better scores, and therefore better quality of listing. But it's been a big push from the BD side to actually get enough listings and different products out there. And just a really, really good team who have been pushing the products really fast.
How many chains is that?
So we cover 20 chains. I think it was 26 at one point, but same again, some have kind of whittled away.
Wow. There really is that mass adoption piece. It's not, focused on just the Ethereum network. You guys are really supporting, that full crypto ecosystem.
That's gone.
So sorry, Dan, just, out of interest here, there's a listing process to put these various, exchanges up and protocols up, but how, maybe more in the traditional sense, do you think about distribution, the end insured getting protection? Do you rely on, outsourcing that to the protocols that are listed and the, interested parties around them promoting the message? Or, is there a broker network or an incentive, scheme for individuals to pull in insureds? How do you think about distribution in sort of framed as how the traditional world would talk about distribution?
Yeah. The distribution is tough. Definitely very, very tough. We're under quite frustrating advertising guidelines on pretty much every platform between crypto, Web3, and insurance. I mean, one of those three will trigger some sort of like regulatory guidelines, what we can and can't do. So that makes advertising directly pretty tough in terms of paid adverts. In terms of we do offer a nice referral program that works quite well. So our partners, the listings can actually link back to us. I personally subscribe to this philosophy that don't rely on partners to do your selling for you. I think you as a team, as a protocol, have to be the ones there pushing it. So we as you guys know, I'm always around the world. I'm at a lot of the different conferences and events. Our team's always at different events. We're trying to be there, meet people, push our services out. We're in thousands of different groups. We jump into the communities. We do everything from AMAs, podcast spaces, pretty much any type of shared media. We will produce videos on their behalf because we won't rely on them to do it for us. But the reality is the best thing we found for distribution has really been direct integration. So if you think in traditional insurance, the like opt-in for a flight insurance when you book a flight, that kind of level of easy access, one-click opt-in is where we've seen the biggest uptake of and success, just through sheer simplicity of opting in. Because at the moment, otherwise people have to, say they're staking for a particular yield, they'll stake into particular protocols, and they come to our app separately, and that's just too many clicks and two different UIs to deal with. Whereas and we have that in a couple of instances, and we're trying to do more, if there's a very simple flow process where we have a widget on someone else's app or it's directly integrated into their actual process, like our recent partnership with LeFi, the bridge and DEX aggregator, where it's a simple opt-in for insurance coverage. All the price is put live for you, everything else is there ready. So that has shown the biggest uptake in adoption and distribution for us, because it's just, I think, making it as simple and easy as possible. And it's actually where I see the future of the space going, is just either direct integration into operations, and I think that will happen at some point, or an opt-in for users as part of a process in the space, instead of having to go to a separate entity. Which again, it just speaks back to efficiency in the space, and that's just one of the things that's been missing so far.
Yeah, I'm excited by the opportunity for embedded insurance. You could also imagine a number of opt-in options by various insurance providers at point of sale or point of trade or point of activity. So very exciting, but happy to help in any distribution ways. So there you go, listeners, go and check out InsurAce. This isn't an advertising message, but yeah, excited.
But it's true though, because I think if that integration, and then you combine that with the Web3 technology and the ability to view things live, view your cover live, view your policy live. And for anyone to be able to prove that someone's got an insurance policy, you take car insurance is a great and simple and well-known one. Being able to prove that someone has their insurance immediately on chain and verifiable by anyone, anytime, would be a significant improvement to the existing insurance system that is there in most countries for car insurance. Mm-hmm. There's plenty of uninsured drivers. There's plenty of uninsured vehicles out there. Being able to see, which ones are, insured and through a DeFi system would be incredible.
Absolutely. Yeah, Danielle, over to you.
Yeah. Well, I've given a few of the presentations, and I constantly talk about this idea of, or on insurance, I constantly talk about this idea of embedded insurance, and it's nice to see this protocols adopting it, but I want to see a Coinbase, a Binance. I want to see just a massive custodian that's like, as soon as you sign up, bam, you. So that's where my gears were going. Of I love that we can offer this in this DeFi space. We know the DeFi space is wholly, uninsured. It's like 1% probably is like the last number I've seen. I would imagine it hasn't grown too significantly since then, but the DeFi space is, for me, it's can be a little more trusted. So I want to see it more in the custodian space. I want to see it more in the CeFi space and in crypto as well. So I hope we move that way. I think
that's the next step, is getting back to traditional types of insurance has to go through the sort of middle grounds first, which from a Web3 perspective is the centralized exchanges, before you start heading back to traditional finance, then into the real world, so to speak. So yeah, I mean, we've actually been working on a side project called the CDIS, the Crypto Deposit Insurance Scheme. That's not quite ready yet, but it's the same sort of idea. It's basically like FDIC for crypto, to be adopted by people like Coinbase or Binance. But it comes with a whole load of extra regulatory issues, and they would need it to be, a licensed regulated entity, which could be the one we're setting up. It could be a different one, but we are kind of working on a solution for that. But that is a huge extra bit that can be done. You're looking at something like FTX last year, and sure, there are DeFi coverages available for something like FTX. We have cover available on Binance and Coinbase as they are, but the reality is something like an FDIC for crypto, for an FTX type solution, where the big players, it hurts them, but they recover and make it back. The biggest problem is that it hurts thousands, tens of thousands, hundreds of thousands of small new crypto investors who are just getting started in the space. And like I said earlier, like the things like centralized exchanges, Shiba, Doge, are the gateways to crypto. And if those gateways are the ones that fail, you're just going to scare a whole load of people off, who will then go off and badmouth crypto for the rest of their life because they've lost their small amount they put into it. So
and the small businesses, the startups, the people that were convinced because of their investors to trust one centralized entity. That was what I felt hurt the industry the most. You see just that fallout.
Yeah. And then the secondary fallout, things like BlockFi and everything else that came afterwards as well. And I remember when I was actually sat in San Francisco with a friend of mine, and he hadn't realized that BlockFi, he thought his funds were safe, and then I was like, no, BlockFi is going to be, they got all their funds locked in FTX. It's not going to be good. And I literally had to watch it. I remember it was horrifying. Watching it on a Friday night, having his face going from having a really nice night out to like the realization that his like savings had all just been wiped out by the same thing. It was just tough.
Well, and speaking of the black eyes, maybe this is a good time to go into the, Terra Luna DPEG. For me, obviously it's hard for those investors. It's hard for people that lost their savings and all of that. For me, it was to see how InsurAce handled the aftermath, to see that you guys moved so quickly to cover 173 submitted claims. And I think it was around $11 million paid out to those policyholders. It at least told me that we were in the right space. We were moving in the right direction. We're giving them a higher level of maturity to the space. But can you tell us maybe just some behind the scenes, like, where were you? What did your face do, when you saw it happening, and how did you guys, what was the sentiment with the team?
Well, I can tell you it personally ruined a trip to Bali for me. That's for sure. I was, no, we kind of saw it coming a few days before. I think we're very lucky in the fact that we are all attached to Twitter and other information sources that we do hear rumors about things all the time. And, so we do get heads up on things that could be potential problems a few days early. And that one in FTX
next time.
No. That's what everyone says that, and then I'm like, no, because for every one that is something, there are 20 that aren't, right? So otherwise, you'd be getting a text from me like every other day, which is fine. I'll get you a text every other day, but the reality is, it's just not viable. Everyone always says that, when I say, oh yeah, we kind of heard about it a couple of days early, but the reality is, it's not the case for 99% of the things we hear about. So UST Terra and Luna. So when that started going, we realized that it was our biggest selling product at the time. I think it was also our very easy way of explaining what we do. So at the time, Anchor was offering 20% on staked UST, pretty much like a fixed rate of 19, 20% or whatever it was. And so we would offer smart contracts insurance for around 2.5%, 3% on that, with stablecoin DPEG insurance for about 1 to 1.5%. So pretty much, if someone's staking their assets in and getting 20%, the cost of them over insurance would be 4%. So they'd still be netting 16%, which right now in the middle of a bear market sounds fantastic. Back then it sounded relatively small compared to the hundreds or the thousands of percents you could get on like Olympus or whatever else was popping up around that time. So Yeah, when that happened and that started turning, we realized it was one of our best-selling products, not only across just direct stablecoin depot, but as bundles as well for Anchor and UST or Mirror or I can't remember the other ones. So it was sold as a few bundles, and that was yeah. So when that started going, we basically had to respond. Like, the community started panicking. Everyone's panicking across the space. So the ops team went into overdrive, just trying to do post-mortems, figure out what's actually happened. There was a huge amount of debate between stakers and claimants, between the whole community about whether or not the market was manipulated or whether or not it's actually a claimable event for whatever the cause was. And I think that's still not exactly determined to whether it was an economic attack or whether it was actually a fully qualified DPEG. People weren't sure if it was going to go back up or not, whether it was too big to fail, whether the entire mechanism was just flawed from the start. But at the end of the day, it did drop down to like 0.05 on the dollar. So it definitely depegged. So we learned a lot the hard way from that. I was on I think Discord, Telegram, to Twitter, every message, just trying to like deal with community, making sure the people who were claiming were getting their claims processed in the right way, making sure, and then stakers who were panicking because as part of the protocol's operations, the funds get locked up for the amount that gets paid out, and it was a significant chunk of capital. So they were all panicking about losing their money. So we had pretty much everything. Lots of people being supportive, but the vast majority panicking about losing money one way or the other. And that was tough and stressful to deal with. And so I was up super early until super late, just always on it, just having to deal with all the messages ourselves, being able to sort of a key point of contact. And I used to, way back when I used to run and own bars and cocktail bars, and I thought I'd dealt with the most stressful people in my life back then, so I was relatively calm. But man, this really pushed that a bit. No,
but
so
then the relief came, which is to actually process. So did you have happy people after that?
So then we finally got to the end of it. No, obviously not. People, sure, you had some happy people who got paid out, but then we're still dealing with stakers who are still upset about the fact that they lost. People who haven't checked their positions in like a year have just checked up recently saying, "Oh, why have I lost X% of my staked assets?" So we still have to deal with it. It's a great use case for the space. It's great to show that it worked. Yeah. It did show that some of our risk management in-house was off. And it's always easier to say with hindsight, right? Because you look at it now and you say, "Oh yeah, we were oversold on particular products and whatnot," but everything was transparent the entire time. Anyone who was buying up or staking with us could have checked that at any time and spotted it or flagged it up. But the reality is, it just wasn't either perceived as risky enough, and I guess that was the same for the whole space, right? Which is why it was so spectacularly bad. But the community, anyone, that's nice about doing things transparently. We could have done, but obviously people don't see that way. All they see is what they've lost. So we've learned a lot from that. It was a very hard lesson, and it did take us a couple of months to then stop everything, look at our policies, look at our processes, our systems, the way we handle claims and complaints, and everything really, and just improve everything for going forward. So now our risk management levels are a lot more aligned, and everything is better managed. But yeah, it was unfortunate. It was good and bad. Obviously, we needed a use case to show that DeFi insurance works. Yeah. But having our largest product be the one that was that use case, and by a good margin, was probably not the easiest thing for us to deal with. But we dealt with it. And yeah, compared to traditional insurance for a new product, a risky product, the whole process took about a month, maybe 6 weeks tops, to actually claims, process, and payout was all done quickly. And if you took that same type of coverage and payout in the traditional market, you'd be, especially at the tune of it was 11.7 million. That would be dragged out in courts of litigation for months, if not years. So to actually be a part of that, actually see how well it can work, was fantastic, and to know how much we can do going forward is amazing. But unfortunately, since then the market's been in a bit of a tough pickle in DeFi. So it's not you expect it to be like turbocharge the insurance. Everyone's going to buy it up now. But the reality is that the whole DeFi has taken quite a big hit since then. I think TVL in DeFi is down from like 330 billion down to about 40 billion, sitting with a few OGs. And, that's been the toughest part of this. And, but we know we're well positioned for the next run.
Sure.
Well done to the team. That's always a highlight for me to a shining star in the crypto insurance space. So.
Yeah, and interesting to get some of the, the behind the scenes. I mean, if there was a loss event and someone felt that they had protection with InsurAce, what is the process for them to go and, submit a claim and get a payout now that you've gone through that kind of learning?
Yeah, so it's super quick. So we've got we adjusted like the information they give us to start with. So it's not full KYC, but we have like nominated wallets. The policy wording's being changed to remove any ambiguity. I mean, we had a few satellite cases where they didn't quite fit the policy before, but they so we've basically removed any of the questions, as well as like I said, these huge debates over what qualifies, what doesn't qualify that we had. Helped us to shape the products for the updates going forward. So now, in the event of a claim, the user can just go through, submit some evidence. We will help them on any channel that they feel comfortable with, in terms of actually submitting the claim. And then it just seamlessly goes to an advisory. The advisory board still puts together a report based on Excel information. The advisory board themselves have been improved in terms of the experts that are on it. The report then goes to the insured token holders who vote, and that whole process has been sped up, made much more simple. And I think the important bit was just removing some of the ambiguity, and also just removing like the risk takers. I think if they're risking more than like 5% on a particular payout, then they start to like panic. But by keeping it below certain thresholds, it actually allows us, and actually understanding as well, like through the amount of claims and the amount of hacks that have happened in the last couple of years, you see that a lot of the time things get paid back by the hacker, or maybe not all wallets are affected. So by taking aggregate of that, you understand that even with a big hack on a big protocol, there's still not going to be the full amount of your capacity that's been sold out for insurance that gets claimed for. Even UST, we had 22 million worth of active covers at the time. But the 12 million, the 11.7 that was claimed was actually just because the other 10 million people had either sold their UST before, or they traded in and out. They've been using arbitrage during that period, or they just had some old cover that they hadn't cancelled at the time. So there's a big understanding that there's probably in an event maximum about 60% of the total capacity sold that's actually going to get claimed for.
Mm-hmm. Yeah, that's great. Do you, very quick one, last one from me is just, do you have a holy grail example of where this could go? A holy grail insurance solution end to end. Obviously, we're very excited to be partnering with you as a sponsor. The composability of different protocols and insurance offerings in the space. The opportunity there is so high. Do you have a vision of what an optimal solution could look like?
Yeah, I think there's been this idea of a wallet-based insurance that's been around for a while. Partnering with the likes of a MetaMask, a Trust Wallet, etc., where you could have that direct sort of feed and pop-up of an insurance option no matter what you interact with crypto. Do you want to, cover the crypto you're holding in your wallet? Do you want to cover your DeFi states or the NFT that you're buying? A direct integration with that, where it does cover pretty much everything in crypto. The biggest problem we face is capacity, the ability to actually have enough capital backing it in some form or another. And that's, again, what leads nicely into the partnership here, to be able to offer significant coverage for enough users, because at the moment that's the biggest hold up in DeFi insurance is the low level of capacity.
Our podcast is called The Missing Link. We're constantly trying to uncover with our guest what is missing in this mass crypto adoption. So we'll put it to you. What's the missing link?
For crypto in general, what people are missing is confidence. And I think it's just part of a cycle, right? We talk about insurance, DeFi insurance, as if it's like just come around, but it's a few 1,000-year-old industry. that's just been developing and building up slowly, and we're trying to recreate it within the last 3 years. I mean, it's it's slightly ambitious for us. The crypto space is in a very similar way is 13, 14 years old now. So still extremely young in terms of recreating entire financial markets and systems. And so I think that the big adoption, and actually this is probably my personal take. I've got a huge personal interest in AI as well. I wrote 2 books about digital immortality years ago, and very philosophical. But I think everyone sees crypto as this fun thing for now. But the big thing that is kind of still missing from most people's view is that we're creating these AIs for various different things, and AIs, when they become more independent, and I don't want to say sentient because it's a very difficult way to express AI at this point. But as they become more independent, something like crypto solves their ability to transact with one another very, very easily, whereas an independent AI can't necessarily access or create a bank account. I mean, it could if it just hacked the system, but why would it need to when it's already got crypto? So I think people, everyone assumes that crypto is there as a tool for us, but I think it's going to become more of a tool for the wealth transfer between different AI systems that are employed by people. I think that's going to be the massive catalyst to the next one of the next bull runs, at least.
You remind me of a shirt I have, and it's a refrigerator, and it's like, on the blockchain, no one knows you're a fridge. And so exactly this, it's like Internet of Things, all the machines it's not just for us humans. We really can, expand it to this. It's not the global world, but the technology world. So.
Well, fingers crossed we're all slaves to the machines, and then that's the missing link achieved and the best use case for blockchain. Dan, thanks so much for the discussion. Insurance is obviously an age-old industry, and you guys have been applying it in a very modern way to this modern ecosystem in a totally appropriate and exciting way. So excited for our collaboration. Great to have you on as a upcoming sponsor to Names, and thanks for the discussion.
Yeah, thanks, guys. It's been great.
See you around the world.
We're one step closer to finding the missing link. If you enjoy our show, please rate and review us wherever you get your podcast. And be sure to come back next month. Until then, we are the missing link.